Hi friends, SEBI categorized mutual funds into these 5 types: equity schemes, debt schemes, hybrid schemes, solution oriented schemes, other schemes. And equity schemes are further classified into 12 types. Present video is about 6th one, equity linked savings scheme, ELSS. As per 2020 budget rules, while filing the tax returns for 2020-21 financial year, taxpayers have two options. They can file their tax returns as per new tax regime or as per old tax regime. If you are filing your tax returns as per new tax regime, then you cannot claim any deduction under section 80C. But assume that you are filing your tax returns as per old tax regime, then you can avail a tax deduction up to 1,50,000 for one financial year under section 80C of Income Tax Act 1961. To avail this deduction, you can invest in any one of these traditional tax saving investment schemes like NSC, EPF, PPF, NPF, SSY, tax saving fixed deposits, senior citizen savings scheme and life insurance. Before investing in any one of these schemes, you have to review one popular mutual fund which is designed only for the purpose of tax saving, that is ELSS. Stands for Equity Linked Savings Scheme. In SBI, same fund is known as Magnum Tax Gain Scheme. This mutual fund scheme comes with a triple benefit. One is you can claim a deduction up to 1,50,000 under section 80C. Second one, it gives maximum returns to the investor. And third one is it has a shortest lock-in period. Let us know in detail about ELSS. First point is ELSS is one diversified equity mutual fund. For example, one asset management company launched one ELSS scheme and able to collect corpus from investors. Now the fund manager of AMC must invest maximum portion of corpus, that is minimum 65% of this corpus in equity securities. Remaining amount he may invest in debt securities. As maximum corpus is invested in equity securities, ELSS comes under equity mutual fund. When market is high, this fund gives good returns to the investors. Comparing to traditional tax saving investment schemes, here you can see better returns. If you observe this fund past performance, in an average it is giving 15% to 20% returns. However, the returns in these funds are subject to market risk because equity securities are quite volatile. And ELSS is one diversified mutual fund because fund manager designs the portfolio with different asset classes such as equity securities, debt securities. Besides this, in equity category, fund manager maintains a multi-cap portfolio which contains the stocks of large cap companies, mid cap companies and small cap companies. Moreover, ELSS is one flexible fund. This flexibility allows the fund manager to switch between the stocks according to market trends. Mid cap and small cap stocks perform better in bullish market and they are risky in bearish market. In another scenario, large cap stocks underperform in bullish market and they are safe in bearish market. When market is high, fund manager purchases more mid cap and small cap company stocks. And when market slumps, he plays safe by moving the funds from mid cap and small cap stocks to large cap stocks. Thus, by continuously modifying the portfolio, fund manager tries to grab best opportunities. When market is high, investor can reap the benefits. When market crashes, he can maintain the fund with a minimum risk. As this is a multi-diversified mutual fund, this fund is suitable to new investors. If he selects this fund, then slowly he will come to understand how different stocks react to market conditions. Now let us move to second point. Second point is flexibility to invest. ELSS provides you the flexibility of investing via lump sum mode or SIP mode, systematic investment plan. In lump sum mode, you have to pay total investment money at a time while purchasing ELSS fund units. Come to second mode, SIP. Paying total money at a time may become a financial burden to you. It is always convenient to invest a smaller amounts every month. By using SIP option, you can start your investment from as low as 500 rupees per month. Every month 500 rupees will be debited from your savings account and it will be transferred to your ELSS fund account. Next point is third point. These schemes have a lock-in period of 3 years. Means you should not redeem, sell or transfer your units for a period of 3 years. Let us see the lock-in period in case of other tax saving investments. If you see tax saving fixed deposit, lock-in period is 5 years. In case of PPF, lock-in period is 15 years. EPF, lock-in period is 5 years. NPS, 30 to 35 years. SSY, 21 years. And in case of life insurance, generally we prefer to invest for a long period. Now, lock-in period will be 15 to 20 years. Thus, ELSS has the lowest lock-in period amongst all other tax saving investment schemes. Suppose you want to pay the investment amount via lump sum mode. If you pay 1,50,000 rupees on 1st May 2016, then your investment amount will be locked in till 1st May 2019. Suppose you want to opt SIP method, then you will pay the total investment amount on installment basis. No? Suppose you want to invest section 80C quota amount 1,50,000 in ELSS only. You want to pay 1,50,000 in equal installments throughout the year. Then each installment amount will be 1,50,000 divided by 12 months is equal 12,500 rupees per month. Suppose you paid first installment amount 12,500 in April 2016. Then this amount will be locked in till April 2019. Second installment amount 12,500. If you pay in May 2016, this amount will be locked in till May 2019. And the third installment amount which you paid in June 2016 will be locked in till June 2019. Thus, each installment has a different maturity date. Once if lock-in period is completed, most of the investors try to redeem their investments, which is a blunder. It is always recommended to stay invested for minimum 5 to 7 years for good capital appreciations. Now the fourth point is tax. Here you have to remember two important points. One is tax deduction under section 80C. Second point is tax on long-term capital gain. Come to the first point. As I said earlier, if you are filing your tax returns for 2020 and 21 year, as per the old tax regime, then investment in ELSS qualify for tax deductions under section 80C of Income Tax Act 1961. Under this section, you can claim 1,50,000 rupees deduction from your taxable income in a financial year. This makes ELSS different from other equity mutual fund schemes. As lock-in period in ELSS is less than other traditional tax saving investment schemes, you can get a benefit here. What is that? Let us see. Suppose in 2014-15 financial year, you invested 1,50,000 rupees in ELSS and you availed this amount as a deduction under section 80C. In next year also, for 2015-16, you invested 1,50,000 rupees in that scheme and you claimed that amount as a deduction under section 80C. In third year 2016-17 also you did the same. Now come to fourth year. You want to claim 1,50,000 deduction under section 80C. But the problem is you don't have that much of amount to invest in ELSS or any other tax saving scheme. Then what you can do is, see the first amount 1,50,000 you invested in 14-15 year. This is your first investment in ELSS and the lock-in period for this investment is 3 years. So in which year it will get matured? 1, 2, 3. So in 2017 and 18 you can redeem this first fund. Similarly, second fund will get matured in 2018-19. When you don't have money to invest in 2017 and 18, what you can do is you can redeem this first fund amount and with that capital gain you can invest in 2017-18 and you can avail a tax deduction of 1,50,000 rupees under that section. Similarly, in 2018-19 you can redeem this second investment and with that amount you can claim a tax deduction under section 80C. Actually it is not advisable, but if you feel that the capital gains which you are going to enjoy in future will be less than this 1,50,000 and if you are facing financial difficulties in 2017-18 year, then you can go for this. Come to second point, tax on long-term capital gain. About short-term capital gain and long-term capital gain, I explained in my mutual funds introduction video. That video link I am providing in the description box. As the lock-in period in case of ELSS is 3 years, the gains which you get on these funds come under long-term capital gains. Like other equity funds, long-term capital gains on ELSS are also taxable. Capital gains on ELSS are taxable at the rate of 10% if gains exceed 1 lakh rupees in one financial year. Let us see this point with one example. On 1st May 2015, you purchased 20,000 ELSS units at the rate of 20 rupees each. So on that day, 1 unit NAV is 20 rupees. So how much you invested in these funds? 4 lakh rupees. And you know you have to stay invested for 3 years now because lock-in period is 3 years. So up to 1st May 2018 you cannot redeem, you cannot sell or you cannot transfer your units. Assume that on 15th January 2019 when lock-in period is completed, you redeemed your units. So 20,000 units at the rate of 32 rupees you redeemed. So on this day, 1 unit NAV is 32 rupees. Then AMC paid you 6,40,000 rupees. Then how much is the long-term capital gain to you? 6,40,000 minus your investment is equal 2,40,000 rupees. In this 2,40,000, 1 lakh is tax exempted now. So minus 1 lakh is equal 1,40,000 rupees. Therefore, taxable long-term capital gain is 1,40,000. On that you have to pay 10% tax, that is 14,000 rupees. Thus the tax on long-term capital gain is 14,000 rupees plus health and education cess. Now come to the last point. When is the best time to invest in ELSS? Investment in ELSS can be made at any time during the year, but we are habituated to push everything to the last day of submission, like our school time assignments. Rushing and picking the first thing that you come across is not the correct tax saving plan. Most of the investors invest in ELSS in the months of January, February, March. By doing so, they may save on tax, but they lose capital growth and dividends in that financial year. So the best time to invest in ELSS is at the start of the financial year. That is on 1st April, it is advisable to invest in ELSS. That too under SIP method of investment with growth option. Before we end, I want to let you know one thing. Tax laws tend to change from time to time. So before investing in any tax saving scheme, you have to thoroughly observe the present tax laws. So this is all about equity linked saving scheme. Hope this video is informative. Thank you.